Thank you for joining me. I'm Alex, and I want to talk about Hershey's today. So, what they make is hugs and kisses. They basically make a teenager's messaging history. Current market price $148, which gives them a market cap of $30 billion. Dividend yield is 2.15%, which is pretty decent, with a payout ratio of 61%, which is, it's reasonable. It's not great, it's reasonable. Revenue $8 billion, earnings $1.1 billion, slightly down. PE of 29 with a forward PE of 24, which means they expect to be making more money next year, so definitely a good thing there. Total assets $8.1 billion, total liability $6.4 billion, which gives them a total stockholders' equity of $1.7 billion. And you would think that a company this old and established has a higher stockholders equity, but who knows. So risk factors, since their main product is chocolate, you would think Milka coming to the US would be the biggest risk factor there. Overall, I would say that since they're so well established, they have a brand recognition, they are in pretty much every single store nationwide. There isn't really much in the way of risk factors. Even if a better product were to come along, they have both the name recognition and the kind of familiarity that people would be unlikely to just switch from one day to the next. So I don't see any risk factors here, really. The balance sheet isn't great, but it's also not too risky. They could definitely survive for quite a while if something changed. So overall, obviously, for a growth investor, there's not really much growth here. For a dividend investor, I think the dividend yield is slightly too low to really consider this stock as a reasonably sized investment. Diversify into it, I would say, would be possible. Obviously, the company is fairly old, very stable, and not really that risky. So I think that buying it for that reason kind of makes sense. But overall, I think that you can get better dividend yields and not necessarily safer companies, but like similarly safe companies. For a value investor, I think that the balance sheet isn't great. The PE is also not great. The revenue growth is marginal, with earnings growth being negative. And the dividend is kind of the only thing that's good here. So I think for a value investor, this is also not very interesting at all. So pretty much the only person wanting to buy the stock would be a dividend investor willing to diversify. That's it for me for today. If you like this video, make sure to subscribe. I'm cranking out more videos every day before market open. I hope you have a successful day.